Swift just unveiled a blockchain-based ledger with more than 30 global banks sitting at the table. This was built with consensus and conducted by Chainlink and aimed at 24/7 cross-border payments. In other words, Swift can no longer ignore blockchain or sit this one out. They're building their own rails to keep up with more efficient ways of moving money for their 11,000 partner banks, where they move quadrillions of dollars per year. And this has left many XRP holders wondering what happens next. And even inside of our own community at altcoinpro.com, people are asking the question, what the heck is Swift doing? Why are they making their own distributed ledger technology? Will they be done by November of this year to meet the ISO 222 deadline? And most importantly, what does this mean for Ripple and XRP? Many people expected the XRPL to be the new financial system that many of these banks are going to do global remittances and money transfers through. But what if that's not the case? As there's been no mention whatsoever of Ripple or XRP in this deal. And if banks run their own ledger through a closed and private blockchain built by Consensus, Chainlink, and Swift, do they try to box out public chains like the XRPL, or do they eventually tap them for liquidity and reach, seeing as XRP is third largest crypto by market cap that isn't a stablecoin? And according to Swift, who's run by this gentleman, Javier Perez Tezos, they say they want interoperability with existing and emerging networks. But it seems like the battle lines are obvious. The next few months will tell us whether this is a closed loop or they're actually trying to build bridges. And as with all good things, there comes a bit of pushback as Brian Armstrong, CEO of Coinbase, is publicly shaming banks and even blasting out text to everyone that has a Coinbase account asking for their support and to call their legislators to condemn big banks, which are now trying to stop stablecoin legislation through the Genius Act, and we're going to cover that as well. Now, on a more positive note, reports say that the SEC has withdrawn delay notices on a wave of altcoin ETFs, including XRP. And after adopting a new listing standards, this is going to put products like XRP on a fast track that keeps the ETF story in play into this October. And yes, October tends to be a pretty strong month for the crypto markets as we're being supported at prior range lows, and clear rules are finally coming as we're expecting a market structure bill by the end of the year. And now even SEC Chairman Paul Atkins is putting crypto at the top of his priority list. So when you pair that with this recent Swift move, whether or not it means more growth and expansion for the XRPL, there's one thing that is certain: crypto is bound to do well because this is blockchain technology and the world needs to modernize. So stick around till the end because I'll be connecting all the dots on Swift's new ledger to the ETF sprint alongside what to watch for by the end of the year so you can properly manage your crypto portfolio even into this week. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul, and this is a very big piece of news, especially for the Ripple and XRP community, as they were expecting Ripple, or better yet, the XRP ledger, to essentially flip the switch, is often a phrase that we'll hear, and a lot of the liquidity between all of these banks, in other words, global remittances, to move on the XRPL, as that's kind of one of the things that it was designed to do. However, in the latest announcement directly from Swift, in partnership with an Ethereum developer, Consensus. And by the way, when we talk about liquidity in the DeFi markets, Ethereum by and large has the most money parked on chain, and that includes stable coins, among other ERC20 tokens, which again are built on the Ethereum ledger. That said, Chainlink is serving as an oracle and has partnered with them as well. So now you have these three major players truly bringing blockchain to the world of crypto by building out their own blockchain and DLT. Swift is going to connect all 11,500 banks to Ethereum and other blockchains, and I never thought the day would come. But where people are kind of annoyed or frustrated or having a lot of questions is whether or not XRP is going to be involved. And as you can see, they did mention that other blockchains would be involved. Even our very own expert, DeFi Mo, stated they're going to use several networks as they've always communicated. So that doesn't leave the XRPL out of the running, especially if there's a lot of liquidity there and there's a real use case for them to be involved. That doesn't mean that the XRPL will be out of the race, but it also means there's a lot of competition. And that is the God honest truth. In the world of business, you don't have to use someone that could be considered a competitor if you can go and build your own. That doesn't mean that building your own is always the wisest move. It simply means that they're still trying to own the largest piece of that pie. And right now, Swift does own the largest piece of that pie, which means that if a lot of those banks started using the XRPL and completely stopped using Swift, then Swift as a company would lose tons of money in revenues every single year. And that's not what they're trying to do. So they're working to build their own blockchain now. Now, directly from Swift, they stated the blockchain-based shared ledger will be a secure real-time log of transactions between financial institutions. We'll start with a conceptual prototype with consensus. It will record, sequence, and validate transactions and enforce rules through smart contracts. But the key point I want to share with you is the fact that the ledger, and this is directly from Swift, will be built for interoperability, which means it will connect with and communicate with existing and emerging networks. So as long as the XRPL is being used, it will connect with these networks. But at the end of the day, it's not going to be only the XRPL. As you might remember, there's also a very large market of stablecoins, and there's always going to be those behemoths or gorillas in the room like Tether. But because Tether was so profitable as a company, you started to have a lot of other people come into the space and say, hey, we want a piece of that pie. So now you have USDC, you had Athena, you have DAI, you have RLUSD, you have PayPal USD. Heck, you even have World Liberty Financial, Trump's family company, launching their own stable coin. So at the same time, or along the same vein of thinking, you are going to get a situation where a major player like Swift isn't just going to give it all up. They're going to go and build their own to compete in the space. Now, the information I have on this page through this image is from Masari Research, which basically states the way that Chainlink is involved is the fact that they are essential to data feeds through their Oracle business. If you've ever heard of the company Oracle, Larry Ellison, they're one of the biggest companies in the world, and that's because they make sure that every single company online gets proper data. Imagine if I didn't have proper data when it came to looking at a chart and saying, this is the real price, or better yet, the real time, or the real temperature outside. There'd be a lot of issues. We need clear and proper data feeds, and there can be zero downtime. In the same way, Chainlink is involved, and they have been with Swift for quite a while and have worked with Euroclear, UBS, Citi, BNY Mellon, BNB Paribas, and so on and so forth. Whereas Consensus is involved with Linea, which is an Ethereum layer 2, and they will be involved on the on-chain payments and messaging. And again, they've run pilots with all sorts of major banks. Now, people online have been throwing a few theories around surrounding this whole conspiracy with Ethereum, Consensus, and even Gary Gensler having something to do with that Ripple lawsuit to slow them down. And it really harmed their price action and their innovation for years. So that said, at the time, Swift may have realized, and again, this is completely theory, this is conjecture, but it makes sense. So let's have a listen. This gentleman says Swift may have realized that they needed their own blockchain or distributed ledger technology for their payment system. And that would be obvious, right? If they went ahead and used any one of these blockchains, that it would have said, holy smoke, we can do really quick transfers 24/7, 365, almost near instant settlement with billions of dollars. That is insane. We're going to get eaten alive by this technology. And so either we beat them or we play dirty, but if we beat them, we need also some global regulation, considering many countries were not privy to blockchain or crypto. Matter of fact, you had companies like Facebook trying to launch 2 different crypto tokens for Facebook, which both got shut down by regulators. So imagine a major global player like Swift trying to do the same. So if you can't launch this technology, or you didn't have the right technologist on your team at the time, you might as well fight them in the court. Now, his theory is that it's possible that Ripple and Swift had discussions, or that Swift even made Ripple an offer. Ripple might have turned that offer down. Then more recently, for the first time, he's even heard him do so. Brad Garlinghouse openly said that Ripple is aiming to take 14% of Swift's volume. And imagine, if you're a player like Swift, you see this, you know exactly what they're aiming to do, and you're not going to let this happen at that moment in time unless Swift owns a piece of Ripple. The problem with owning a piece of Ripple is Ripple is extremely profitable, and they have been so, which is why they do not want to go public yet. 9 times out of 10, companies go public because they want more access to capital. Ripple didn't need that. Instead, they were using their profits and their current balance sheet to buy out the right key infrastructure moving forward. Now, he thinks that they should consider whether or not Ripple's rejection of Swift, if it happened, was a strategic move. After the SEC lawsuit, Ripple may have positioned itself to compete directly rather than being absorbed. And that's currently what we're seeing, which is why Swift is now moving so rapidly to build out their own blockchain, because trust in Swift is eroding. For example, Russia will never use Swift again. Even if relations with the US were to improve in the future, Russia would never route transactions through a system that could cut them off. Other countries are watching closely, systems like China, but they lack global liquidity. This is exactly where Ripple could step in. It would make sense for Ripple to serve as a neutral settlement layer between the US and other countries, building global liquidity over time and rivaling Swift in the corridors where trust in Swift is breaking down. And at the end of the day, it's going to take Swift some time to really get this ball rolling, whereas Ripple already does. The real question is, will banks start to move over and use Ripple to the same degree that Swift does, or will we just start to get a trickle effect over time as Ripple continues to close deals and they continually improve the efficiency of their blockchain? The good news for a company like Swift right now in this race, this global arms blockchain race, I should say, is the fact that they get to start building this thing from scratch, which means they can make all of the improvements, looking at all of the issues blockchains have had in the past and fixing them before they reach that bridge, which is huge. And that's going to give them an upper hand in this race. Or maybe they start to partner through interoperability. They say, hey, Ripple, if you're doing business with these banks, onboard them into our system and vice versa. And so liquidity will be moving back and forth. And personally, that's what I think is going to happen. I don't think there's going to be an absorption. I personally believe they are competitors for this business, but at the end of the day, even competitors have to do work together, right? For example, you have different banks all over the world, heck, even in your hometown, and ultimately they all want your capital, but they're not going to tell you, well, sometimes, right? They're not going to tell you, hey, you can't move your money from our bank to a different bank. There has to be interoperability where you can actually do a wire transfer, and that's essentially what I believe is going to happen in the future, but they're going to all want a piece of that very large pie. And right now, Swift has been the incumbent. And more often than not, what we see with incumbents is they lose dominance as technology improves, or they fail to improve their technology, which is why I think they are currently hustling to build their own blockchain. Now we're going to move on to this next piece of news directly from Brian Armstrong, Coinbase CEO, basically talking about the hypocrisy from banks, which is causing problems for crypto again. Banks want to remove your ability to earn rewards when holding stable coins. In other words, you can't earn yield by holding stable coins on any one of these exchanges. And banks are doing that because they know if you can earn yield that is higher than you would at your traditional bank by holding a fiat-backed stable coin, then at the end of the day, why would you hold it at your bank? This is going to harm a bank's long-term prospects, while more and more money flows are going to go to the stablecoin issuers and crypto companies. He's stating that competition is good for consumers and they're just mad that they're losing. Big banks don't need another bailout. They need better products, to which I say hooray, and I agree. It's time for these big banks to step aside and either adopt blockchain or get left behind. But one thing I know for certain is the fact that the majority of Congress and now even all of these major regulatory bodies like the SEC are making crypto their top priority. Again, you even have Stuart Alderodi, the chief legal officer over at Ripple, stating Paul Atkins is doing his job, making crypto clarity his top priority. Now we just need Congress to do it or finish the job. Now, another reason banks fear crypto so much is because it directly competes with their old rails and outdated technology systems. Listen to Eric Trump talk on it.
Bank that I banked with for 25 years. It took me 120 days to go through and know your customer, right? And you're sitting there saying, why? Why is it every week as a hospitality company, right? I'm trying to get a wire out, or I'm waiting to receive a wire through the SWIFT system, where if I don't get it out by 5 o'clock, and by the way, even if you get it out at 5 o'clock, zero chance it's making there before Monday. You know, when you can transfer $500 million worth of Bitcoin from an iPhone to an iPhone, having a wallet address, you know, at 11 o'clock on a Sunday night, you know, for no fees, for practically no fees. And that scares the big financial institution.
So banks are essentially a dying model. They know this, and that's why they're going to fight. But ultimately, I think they're going to lose, because even the Treasury is getting behind crypto, considering the biggest buyers of US debt and treasuries are going to be stable coins. And the only reason that we'd have more and more stable coins and more stable coins issued is because there's actually people using it. The only reason people would continue to use it and being onboarded is because there's legit clarity and regulatory guidelines, so companies don't get wrecked by our own agencies. That said, we even had the SEC withdraw all delay notices for Solana, XRP, and other crypto ETFs. And this is huge because, yes, we are expecting not only a market structure build, but we're also expecting an XRP ETF by the end of the year, arguably before the end of the year, for cryptos like Solana, XRP, HBAR, probably Dogecoin, and a few others. And so because these delay notices are dropped, there's usually going to be about a 75-day period before many of these will be listed on major exchanges directly from the exchange, as long as they hit all of the criteria. So this is huge, and I believe this is going to be one of the largest catalysts moving into the end of the year. Now, that said, we are going to dive into the XRP price action. We're rallying pretty hard off of those lows at 273 to 275, as you can see, consistently being supported at this trend line for a series of equal lows with a few lower lows in terms of wicks. But generally speaking, that's where people get liquidated if they're on leverage. And this essentially stops a lot of people out because they might have their stop right below the prior range low. Market makers will move the market in that direction, and then the market will go back in the general direction of the overall trend. And the overall trend for XRP has been up. We're not going to cover all of the price action right now. I do this more often in many of the videos, but what I will say is we are seeing support at 275, and I reasonably expect us to break at least above the $3 range. And if we get above $3.12, things are going to be looking pretty good for XRP. Now, the reason I believe that we're going to continue to trend to the upside is if you come over to CoinGlass and you go to liquidation maps right here, I'm first going to look at Bitcoin. And so right here, this red line is the price of Bitcoin currently, about $114,500. On the left-hand side, you can see that we have far more cumulative longs. In other words, we have more people that are long, or more money that is long, to the tune of 3.2 billion versus 1.7 short. So that said, I tend to lean where the majority of the money is, especially on the daily time frame. Looking at the 7-day time frame, it's far larger on the left-hand side, which again leads me to believe the whole crypto market is going to be pumping pretty hard. You almost have 3 times the amount of money long right now on Bitcoin. And the same looks to be true with XRP, not about 3 times, but you still have more money long. So that said, I think we're going to continue trending to the upside, where we could see a bit of resistance is at that $3 level, or this trend line right here if we were to climb again. Look at this, back up to $3. So this seems to be a pretty interesting resistance, and I'm going to be watching it closely. And at that moment in time, if we break above the trend line and above $3, I reasonably expect us to get back up to like $3.12, where I will be uber long and buying on that pivot point and a major breakout for new all-time highs into the end of the year. I think the ETF, I think a market structure bill are going to push us for that final pump into the end of the year. I don't know whether or not we're going to see a super cycle into 2026, but we'll be watching it daily by then, and we'll keep you updated on this channel. So that is it for the video, folks. If you want to join one of our 1,000 members over at Altcoin Pro University, check out altcoinpro.com. You literally have nothing to lose by checking it out. You get a 14-day refund if it ain't for you, but there's a reason we have so many members paying us for so freaking long, and it's probably because they're earning more money with this platform, community, tools, training, resources than they spend on it. And that's ultimately the goal, to help you reach your crypto goals and your financial goals, whatever they may be. We have plenty of very high net worth individuals inside of here, as well as beginners who are just starting out in their careers. We have them all over the board, and the education truly is top tier, top notch. The resources are endless, and I appreciate you watching this video, my friend. Go ahead and check out altcoinpro.com, and I will see you in the next video. Goodbye.